Ntombenhle, a couple of strong days on the JSE Monday, Tuesday. We seem to be losing steam this morning, although trading does appear to be quite volatile. We were down a short while ago. We're now slightly higher.
Absolutely, Stephen. It's been a very funny day today. I've just saw before I came on now that the market actually shut up a little bit. So it's a lot of volatility that we're seeing currently in the market. And I think, as Alicia said earlier, it's a wait and see attitude at the moment. The EU sits tomorrow in their summit. It will wait and see whether Greece, Portugal, Spain, or whoever else is indeed in trouble, and how much stimulus is going to be granted to them. So the market's still very cautious at the moment. Obviously, we're all waiting for the United States to also open, just to give us some kind of direction. Yesterday they closed very well, and that didn't really filter through to the rest of the markets. As much as Asia did close up a little bit, it didn't have that much impact on the Asian markets. And we're seeing that currently in our market, that still a lot of trepidation, still a lot of uncertainty as to what is going to happen with the EU tomorrow.
Of course, if Greece's problems are solved by the European Union tomorrow, as you say, it could spread further. Next could be Spain and Portugal. So, I mean, there is likely to be quite a lot of volatility ahead for these countries.
I think that is the current fear, Stephen, is that, we know about Portugal, we know about Spain, we know about Greece. Who else is out there? What is the EU going to say, and how much stimulus are they going to give them? Will it be enough to rescue those smaller Eurozone countries? And, just going forward, it will add a little bit of volatility. But should it be good news all around, then, we expect the market to then shoot up and go back to levels that we saw about 3 weeks ago.
Just taking a look at some of the results that we have out today, quite a slew of them in fact. We had ArcelorMittal reporting a loss for last year, for the end of last year, but it looks like the situation was turning around in the second half of the year, and of course the CEO is predicting better things going forward if the recovery is intact.
Yes, not a very good showing from ArcelorMittal, and they didn't declare a dividend also this year. And, I think, they are cautiously optimistic, but they've got a lot of hurdles ahead of them: steel prices, commodity prices, and also the electricity prices. So they do have some cost-cutting measures that they plan to implement, as well as some energy-saving measures in order to mitigate some of the potential increases they may see from Eskom. But, capital expenditure may go up, and steel prices will also be a determinant in what their performance would be. But, I suppose, the market didn't react too badly to it. It was down about beyond 2% a little bit earlier, but it's come back now again, and it's down about 1.6%. So, not a very good showing there, but no, it's a wait-and-see game also there for ArcelorMittal.
Of course, we did have the CEO, Ntombenhle saying in the commentary that if Eskom were to get the 35% tariff hikes it's looking for the next 2 years, it would really just be simply unaffordable for a company like ArcelorMittal. And I'm sure that spreads beyond Arcelor into many other companies in the mining industry.
Absolutely, Stephen. The threat also of load shedding potentially being reinstated this year is also a big worry for mining companies or production companies. And this hike is going to have a major impact on their revenues and have a major impact on their profitability. So it is something that is of major concern, and trying to find any other avenues or other means of trying to mitigate it is what they should be doing right now, and looking at alternatives to it right now. So yeah, it is a major concern in the entire industry.
Well, results are also up from BHP Billiton this morning. The market seeming to like those. Up nicely in Australia, and they also opened higher on the JSE. First half profit down to $5.7 billion, but that was better than the $5.1 billion that the market was expecting.
Yes, mainly that was on the sale of the Ravensthorpe nickel mine in Australia, in Western Australia, and also commodity prices were mitigated by rising sales. And it was a very good showing. The market liked it in Australia. I think it ended up 2.5%, something like that. Currently, it's a little bit down, but that was because of the pullback that we saw in the market. But yes, a very good showing there. People liked it, and they still depend very much on the demand from China and India, but they seem to be faring well, especially as their sales have shown.
Of course, the CEO, Marius Klopper's sounding a little bit cautious about China, saying he is a bit wary about China's lending to commodity-intensive sectors drying up. So, the China story not necessarily intact for companies like BHP Billiton going forward, perhaps concerned about stockpiling in that country.
Yes, I think you know that is a threat for everybody. I mean, and that extends to the rest of the market and to other counters also. You know, especially the commodity counters, in the sense that China is one of the biggest users of commodities or purchasers of commodities. And should their lending criteria be made stricter, you know, it will affect all commodities, and it will you know, be of an adverse effect to all commodities. And you know, and we saw the reaction a few weeks ago when China started to talk along those lines, and we saw that, you know, people weren't happy about it. And also there's those tax implications in Australia that are under review at the moment for projects or new projects there. So you know, so they're operating in a bit of a funny environment right now, and you know, it's only time that will tell whether anything can be redeemed from there, whether, you know, as far as especially as far as commodity demand is concerned.
Of course, we had that trading update out of African bank investments also this morning, and the shares were down slightly a little bit earlier. I'm not quite sure what they're doing at the moment. It talks about muted trading conditions during the period, but also indicating that market conditions have stabilized, job losses have peaked, and of course we saw those jobs numbers coming out yesterday showing that some jobs were actually created in the fourth quarter of last year, and that the unemployment rate has eased, if only slightly.
Yeah, I think the main feature there was their bad debts. You know, that they have said that the bad debts have possibly peaked at that time. But you know, so there was a 12% drop in new loan sales, and you know, so not very good numbers out there of ABIL. But you know, they've got very high risk loans on their books, and you know, so we did expect that kind of showing from them. They are about down about just below 1% or just near 1%, and you know, so not much going on there, but management is very optimistic in saying that, you know, they're seeing some kind of stability. They will cautiously go forward and start to extend new loans in a cautious manner. Whether that is a good idea at the moment, or as far as their book is concerned, is you know, is I suppose a trader's worry at the moment. But yeah, you know, not too bad a showing from ABIL, but yeah, you know, quite down today.